learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in on March 26, 2020, and today we are going to talk about the most important thing. What we got coming up tomorrow is an important economics release and how that's going to affect the market, but it makes me want to talk about this play today with Boeing. We did $200 into $3,000, but it goes alongside the broader message of what we're going to see here, and we need to slow the game down. So I want to talk about what happened today with the market, what is pretty much causing these moves, and what we're going to expect. Things could speed up from here, or things might slow down. This is really relying on a few different factors. We saw some economic data today, but it wasn't as surprising. However, tomorrow is going to be that jobless claims number, and that could be pretty big. I think that has the potential to surprise. Some people say it's baked in, it's priced in. We do not know yet, but we are going to see, and it's going to be very, very important, just the potential it could bring. However, the main thing the market's revolving around is what's going on with the stimulus package. It seems a lot of things are now slowing down, and that's what we have to do too as far as building positions and all that. So I want to talk about this Boeing play, a trading strategy I have with it. I want to go over the stocks I bought today. I bought 3 or 4 different plays, but there's 3 I really want to focus on, but also just this strategy of how we could play short term and build positions around both broader plays, even buying the dip or even shorting the market further. So there's a few different things here. It's just now, how do we digest this information? What do we look for? And this is historic and crazy in general. So I hope you guys are ready. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99, youtube.com/the stock market. All we ask is that you're positive and respectful. Post a play. Come on. Ask about a play. Say something nice. Go just be around something nice. We hope to see you there. And don't forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? What are you playing? How are you setting it up? Did you get Boeing? Let's go talk about it with me. Are you still going to play Boeing? I don't know. And actually, we do need to talk about that because some people want to say, should you get a Boeing right now? We're going to discuss that. So please, please, please stay tuned. So right off the bat, let us get into the keys. The thing here that I said, you need to slow the game down. Now, we talked about this today. I could even do it for you guys right now. Some people say that I should talk a little slower. We could slow all of this down, but this is something you need to take into consideration now. It is starting to look very, very political, and that doesn't always mean a bad thing, but this is what politics does, because sometimes, the more talking and back and forth, it gives people time to think. Like, I'm thinking about a lot of things right now, even talking at this pace. One thing I would tell you to go back into and look into is the Mueller situation around the time the president was elected. There was all this investigation stuff, and people were saying this and that, and at one point, the market was really reacting to it a lot. But then out of nowhere, as the news kept coming out, the market reacted slower and slower. So even the fact that they are doing politics in this situation, it could be good if it is showing that they can afford the time to even banter back and forth. However, if they take too long, like the time the S&P got downgraded in 2011, it could show political uncertainty, lack of action could increase debt risk, and that will affect bonds and all that. But hopefully you guys get what I'm saying. The point is, this is going to be political. You need to slow the game down. So even moving forward with all this, what I mean by that is, like, this is your first person view even of what a down market looks like. You could say you were alive during this time. They say, oh, the market dropped in World War II, this and that. This is a unique time in the market, but now you're not looking at just the chart. You guys are actually experiencing this. So think about every single time they've brought up crashes and any other crash you've heard about. Some of you may have already lived through a crash before, but this is, just think about how every situation is developing, but now how this is still, time, everything's moving slow with this situation, and that's what we discussed. Realistically, this was only 2 weeks ago, but now with the economy and everything shut down and slowed down, everything is moving at a very slow pace. So slow the game down, and this is what I want to talk about, because this is going to be with the strategy that we're doing. We need to use the shorter term contracts for the rips and then the longer term contracts for the positions that we want to build. And even if you wanted to trade a bear market, you're going to get these rips, you're going to get these downturns. If we see a V-shaped recovery, the point is be prepared for anything and everything. But you can't be so quick to react. And again, eventually the market has been quick to react, but eventually the market, at some point, there is going to be a breaking point or a law of diminishing returns when it comes to reacting. But welcome to your first-person view as far as everything else in the market. You know, why I'm saying this, it's going to be the stimulus bill as these politicians go back and forth, and you're already even getting mixed signals between the governor of New York, what's going on in L.A., and then all this stuff. It's kind of hinting it could be a longer process. However, we have seen in recent times when it does come down to when it comes down to the money, we do respond very, very quickly. So we will see. But the next thing will also be the stimulus bill, and then what now even the reaction will be, I think, tomorrow from the jobless claims number. So we will have to see. But the final thing I'm going to be looking for and what we really need to see here in the market is we need stocks, bonds, and commodities to have similar moves of scale. So that's something that we saw today. I know for sure a lot of you guys noticed it. LQD went up a ton. This thing, and I didn't get to play this. I called this out on the watch list. I didn't get into it. I said I'm going to be patient with it. So I'm pretty impressed with how that already played out. But that was a big move in investment grade credit. But then TLT didn't do much. The market, we ended up closing down. And now this was at the same time the market started dropping when Apple said there was two things, but this was mainly when Bernie Sanders said he might halt the bill. He wants more of the worker protections in there, but then also at the same time, Apple said that they're looking to delay their 5G phone till 2021, and we'll discuss that. But at one point, we were up 4% today. So even after we saw this drop, the fact was you barely saw bonds move. You guys saw what happened with, where is it? Right here, UUP. The dollar went down, and actually went down a pretty sizable portion, so that kind of makes sense, but it was a pretty decently big move there. I can't believe I didn't have GLD up here. And then gold really, it dropped, but it didn't move. Think about the scale and the size you saw yesterday, that type of move, and then compared today, you're not seeing them all move in conjunction. So pretty much, at one point, this is what's happening. You're getting activity pumped into one side, and then you have to hope that activity stays there. Hopefully the dollar or gold stays there, or that bonds or equities stay up, and then you try to fix the other side, and hopefully the other side, while you're fixing that, the other side doesn't fall. So, what I'm kind of compare this is think screwing in wheels. I need to see equal scale where you screw in a little bit of one wheel, go to the next one, screw that one a little bit, and then you balance it out so you don't over tighten or keep one too loose, and then it can mess up the offset. Think that in the broader market and different asset classes, and that's what I really want to see here to get more of a conviction for any of these moves here. So the volume was good today, but I want to see everything kind of move in proportion. But even though these assets have already moved so much, it's harder to see and kind of find that equilibrium where things start moving together. Otherwise, things are, I don't want to say broken, but things are still out of whack, and that means that that's a digestion process. But that is the main thing. So let us get into the plays. So this is the play we're going to talk about, Boeing. And I brought this up the other day. We put $200 in for the next week contracts. We sold them out today for $3,000. I sold out of all of them. We did that 2 days ago. Wasn't a day trade, just a swing trade. Bought it Monday, sold it today. I thought this play was crap. However, what I want to talk about is the strategy. The key was balanced books and just taking advantage of this marketplace and volatility in general, but doing so where the risk reward makes sense. You guys have been seeing the companies I've been setting up. I've been grabbing calls. Some of those went up yesterday. A lot of them were down as we went over. And then today now, a lot of those started to come back. Through the last few weeks, we've been discussing how short-term and longer-term contracts are moving things different. So know which companies that can move, and then the companies that have already moved, and start factoring this in. And, if again, there's a risk element involved. This is why you have to keep everything small, but you can understand a little bit more reasonably what sort of moves are possible, kind of better than the computer. So why am I saying that? It has to do with this BA play. So we'll come here and we'll take a look at this play, and why I say this because we got really far out of the money contracts at the time. So here's the play. We got that 10:13 a.m. March 23rd. We got two of these April 3rd contracts at $167.50 a contract. So come back here 2 days ago. There's that Monday. Remember, the stock was already going up, and it was up a decent amount. And that's why I said, when I started, I saw a lot of velocity there. I think it was off the news that they didn't want to get bailed out or something along those lines. But I also knew, I said, hey, Boeing's going to go back and forth. It was already at a very low level, and we've played Boeing many times. I said, I know this is a stock there. It could move a lot. So this is, like I said with that last example, imagine a few days ago, it was trading at like 100, even like 120. We got a 167 contract. I pretty much said, I was like, yeah, Boeing's going to go up 40, 50% in the next 2 weeks. That's a pretty crazy assumption to make. And I said, that's the play I want. That's where I want to bet on. And that's why someone sold me these for relatively cheap, but now that's pretty expensive for 1 week of time to say a stock is going to go up 60%. That's why the market maker, and even, when you look at these prices, why were they willing to sell it to me at that time? Because the stock was a lot lower. So if you go, $60 out the money right now, that'd be like what, $212 or so. But now they're charging you $500 for that. So the other day on Monday, it was a lot cheaper because every single day the stock was down. But even $100 was a lot at the time because you're paying $100. It's a pretty hefty premium to say a stock is going to go up 60%, which is usually unlikely. So they still charge and ask a high price because Boeing is a big stock. It can move a lot in increments. It can move a big dollar amount. It's already shaved off a ton of market cap. So they know it could move a lot. So they're going to still charge a decently high price until it becomes more and more certain that Boeing's not going to come up. Then the price would go down. So what does this have to do with? We saw news with the company. We knew Boeing could move. And we know now in this market, the other day we were even coming off the bottom and then Boeing was even kind of leading up with there. But the simple fact, we know these volatile markets are bringing around crazy moves. It made sense to get this for $100, or I could at least justify it. Like I talked about, we've been getting different plays. I'm getting a lot of plays. Every other play I'm getting June, July. I got a lot of January plays. I'm going on the short term, but then now that it's a shorter term contract next week, I win a small amount of money because a small amount could go a long way. So the point is, I thought this play was crap, but the whole fact was, I said, well, I know Boeing could still move a lot. I controlled it. I kept it small. This was more just risk management and exposing myself to opportunities versus, picking this at the right time, selling at the right time. And we did do pretty good at the sell, but hopefully this makes sense. But that's why, it's scattering the seeds, and scattering them in the right place, even when it comes into some of these earning plays and kind of getting yourself in opportunities where you could spend a little bit amount of money, but they still have a large upside. That's what you need to learn to identify. And it's those types of companies. That's why I brought up like McDonald's, Home Depot. Those are some like there, but Boeing's a great one. We've played this for years. You guys have seen it. It is one that could do that. So now, even then, now that I showed you even the difference of how much they're charging for contracts, some people said, should you get puts? We're going to have to wait a little bit, but this is probably going to get a little bit cheaper. You want to let it, space out. But essentially, you see there, we got two contracts, $100 each, $200. So then this morning, we were right under the money. Literally, I think this was the fastest I've ever closed out a trade. And again, I know it's in next week. I said that was great money. I had two of them. I sold the first one within 1 minute of open. I sold the first one at $866. So we got a net profit back of 100% of the initial $200 investment. Or no, 400%, excuse me. And then I waited to the end of the day, about 2 more hours. It started to go up. And then at 8:44, we sold the last one at 22. So I got in the money. It kept going up. It went till next week. I was like, well, 800 on the first one, 2,200. I spent $200. I'm going to walk away with $3,000. I was like, well, already taking a loss on the UUP. That was good enough cash for me. So I said I'd take it. And then I had a thesis with today that didn't really play out. But I said if that occurred, I could find a way to get back in it. And that's what's going to happen. I probably won't even touch Boeing maybe till next week unless the prices get extraordinarily cheap. But, I'm not too opposed to waiting. But so the contracts, and you'll see that contract being a weekly, it'll come down in value. But this is what I want to be looking out for. And now that's the next thing too, is just even this marketplace, as I'm setting up these plays, we're going to get big underlying dollar moves. Like, when we move up 10%, 9%, it's no joke. And it's good we got a second update today. Contracts are starting to actually, gain and hold some value. But the key I'm doing moving forward now, the whole key strategy is going to be getting myself in some of those small plays and then, making it key. Again, I'm putting the bigger $1,000 plays in plays with June, July that are covering earnings, but the ones that I'm doing, on the weeklies, I'm trying to keep them smaller in that case. But the key is finding a balance now between shorter term contracts for the rips and then the longer term ones for the positions we want built. And now this is really going to be the key because, think about it. I had that Microsoft. I'm thinking I bought that Microsoft the same day. I spent $1,000 on that play and I lost 50%, but I literally have that play till January. And now that short-term play was, again, we got lucky on it, but we were putting ourselves in a position to get lucky while at the same time controlling the balance and how much we're spending. And my whole screen just glitched out on me. But the key is I was able to make a sizable portion, even 3 times the size of that Microsoft play in a shorter period of time. And now when I'm looking, I'm like, well, then that Microsoft didn't really change as much. And that's what we want here, is to take advantage of these bigger single day moves. And when they're here, find a way to really exploit them to the best. And that's where the short-term contracts comes into play. But the problem with the short-term contracts, they're really risky. If you start buying too much and get over leveraged, you'll blow up the account and then you'll miss everything else. So it's kind of that keeping even a 1-to-5 ratio on shorter term versus longer term, but then having the longer terms to be built. So that's what I'm going to be looking for moving forward. And then making sure we're scattering seeds. There's going to be some plays that are crazy. And like I'm saying, just like in the case of Boeing, I knew Boeing could move $60. I thought it was crazy. Like I'm saying, the 60% seems crazy, but when you do put it into context with how Boeing is moved, the situation, people are factoring in the bailout. But again, this is just Boeing and the fact it just dropped this much. But every other day, the computer's pricing something a little different, still going to account for risk. But there's going to be a lot of plays like this in this marketplace where stuff isn't there. But you can't go chasing everything with a big amount of budget. That's what I'm saying. Even keeping all the plays the same. If I should have kept it the same in this case, but when it comes to the weeklies, keep them small. Bigger plays, I could justify a little bit better. So there was that. And now as far as the rest of the plays I made today, there's a few plays, and I actually like this. I got the Bank of America Strangle. I thought this one was actually very, very interesting. But I got the April 3rd. So again, this is next week, and I spent more money on this, and I justified this play as kind of, that crazy thesis I said with the Nigerian currency and kind of how we're expecting stuff, and to even play the jobs report. I said if there is going to be any big volatility and we start seeing that days, again, this is how I'm trying to take advantage of the volatility. I did it next week. This one was a little bit bigger. I did a Bank of America Strangle. I bought 20 of the 1750 puts at 34 cents, and then I got 30 of the 26 calls at 15 cents. And now this was a very, very good play. Initially, at one point, we were up on both, and that's how I know it's a good play, because that means the premiums were out of whack, but then that means we got it with less volatility. Now the volatility comes up, you can make money both sides. If you remember, we did almost this exact same play on Bank of America. We did this a few weeks ago. See, so you can see, man, these prices were a lot crazier. What's that contract at, man? Damn, those are at $1.25. I bought those for 12 cents on the 3rd. What did I sell them for? Oh, I sold them for 36%. What? Oh man, we could have made a lot more on that one. I think I made $1,800 on that one. I think I did the ghetto spread. I don't remember this, but it was the same exact play then. You guys could see, but that time, the contracts, look how much cheaper they were. I was getting far at the monies. I did 100 of them and then 50, but I still spent, $600 and then another $600 both ways. But they had 2 months of time then. I got the 36 call and the 18, and those worked out very well. Man, I should have just held that. But I gave it some time. We waited, so I had to spend. I spent a lot more. So there you go. The premiums aren't cheap, but I got the 17.5 put, but now this time I'm not $10-20 out the money when I bought the play, and then we're pretty close on the upside. But that's pretty much what I'm trying to repeat here. And the fact was the banks were outpacing yesterday. They did pretty good. They were decent today. And now if that jobless claims does wreck the market or anything happens in the short term, the contracts that'll react the most will be these weeklies. I've made sure we bought these at a relative discount. And again, we got a pretty good sign with both the calls and puts going up. So that was the first play that I made. And then the next play, I sold out of the bookings, but this was the play. You guys failed me earlier here today, but no harm, no foul. This was a bigger play, but I like it. And again, remember, I actually just sold out of these. So I don't like doing this all the time, but you could kind of see how I did it a little different here. But here was the UNHs. We got those on March 9th. I bought 5 of the 130s at 120. And then I sold those on Monday. Remember when everything was dropping, I sold all 5 of those out at 550. So bought them for like 500, got back like 2,500. And they're still, I guess they're holding a little bit less of the value, but we got, big spread. I walked away with 550. It's not too bad, but I wanted to get back in. I said I kind of regretted selling those, but I didn't get them at the most optimal time. So even that's why we made a decent percentage. It was a bigger position. I wanted to get rid of it, but I grabbed these today, spent 1,600. I bought 10 of these at 160, the July 17th. So I got more time on it. almost double the amount of time. But I got 20 bucks further out the money, and I spent 40 cents more than I originally spent, which I like. So again, I did end up spending more, but I did get further out the money, but I got more time, and I didn't have to spend too much and more contracts. So I kind of liked it there. I think it was a good balancing out, but that was the next play. And I just like UNH. I think UNH is going to be a good one to watch. Same thing with Bank of America and the banks. Even I want to even look at JP Morgan as one of the banks to play. I was thinking that today, but there's that. And then the final play, I told you guys about this. I said the premiums need to come down, but I thought it was decent. The part I don't like is April, but I got this apron. We did 5 of the April 17th, 27 calls, which is like right above where they were just at. About 5 of them for 60 cents, so like $300. But the whole idea was I wanted one of these market weird type hedge shitty stock rotation plays, or like one of these stay-at-home Zoom type stocks. So the fact was, this moved up so much the other day. All these Aprils were at like $4. The volatility has killed a lot, and then now since it moved up so much, it creates a weird phenomenon on the chain where now a bunch of options exist. Because, imagine the other day it was just at 27.30. They issue all these new options. People were still buying them. Then it starts and then it just drops, pretty hard. Now it's sitting there. So it's like there's a lot of options. This is what happened with Beyond Meat. So keep that in mind. I don't know if this has the same potential, but I wanted one of these types of plays. I thought it was funny. But it's a different type of exposure. I think it's funny just because I don't really play these types of moves like that. I don't like all the hype plays. I'm not getting in any of the CCL or stuff where there's just a lot of noise. I don't really like too much. But I didn't have any exposure to some of those stocks. We already missed out. I was like, all right, these are decent. We'll start with these, go from there, and keep an eye on it. So I like that one. And then finally, the other play that we made today, I did do a SPY YOLO I lost on. I spent like $60 on a Ocean's 11. Finally lost. You got to see me lose my first one. But then I got these apples, and I didn't like these as much as that news broke that they're delaying the phone. It was a big candle. There's big velocity. So I got 5 of these at 50 cents. It was like $250. They went up to 80, but considering the velocity and the level of volatility, it seems like those contracts didn't go up as much. So that means that there was still some volatility baked in, and that's why the contracts are at that price. So I was kind of disappointed with that, but I'm still going to hold that. This is kind of one of those, like the Boeing play, you see $200 next week. The whole idea, it'd be nice to get in the money, but this one I don't know if it would get in the money. I think that's actually insane. We'll probably flip this one on premium or ghetto spread it, and yeah, that's pretty much it. So as far as everything else, I'm going to be watching Boeing. We'll see. We'll let that come to us. I like the Bank of America, the UNH. I think Apple will be interesting again. I like the APRN. I want to watch Micron. So they had earnings. They ended up beating surprisingly, but they didn't move too much. This one could have been great for an Iron Condor. We should have checked that out, or one of the Strangles. But I have that put play. It's the January one. We talked about that yesterday. I want to see how this plays out and how that plays out. The fact that even though Micron went up today and the IV held, that's a little bit of that earnings rush there for you. So I want to see how that holds out tomorrow and even how that plays out. So that's going to be a good one. And then WDC, that play was up about 200% the one we got the other day. I like them. I'm still going to watch them, but I also want to watch them now in conjunction with Micron, Apple, and even all the other chip makers, because even like AMD, those went up, but started dropping with Apple. Then UUP, this was a pretty big move, but the fact is now this is the price. Remember, this was the day we bought it, then we got it the next day. I'm down now on the UUP. I think I took like a 4 or 7 grand loss on those today. Okay, I think we took 7. It says 7 total. That's not including the 3,000 realized from Boeing. So pretty much, yeah, our net liquidating was just like a $2,000 change there, but it was the profits because we lost 3,000 on the GLD from yesterday. Still holding those. Lost a lot of the TLT. Those ones squashed me. I was very, very surprised at that. Again, this is what I'm saying with how TLT is moving. But the UUP is down 3,200. Still up 26% on the first set of June. Down on the Septembers. I'm not going to average down yet. These have to still move a lot more. And that's what I was saying. A lot of people are asking. The fact is, there's still premium in that play. People are still holding it up there, even though it's dropped down here. The fear is not gone. There's still big volume. So I'm going to wait. I need it to come down more if I want to average down and consider it. I don't think the play's over. And I think this is one of the plays, like I said, I want to build a position around. So this is why I said this play is going to be hard. That's why I said from the very beginning, you got to understand how to play this one. This one's going to be a very difficult one. But, I wasn't even showing you guys the chart there. So I'm going to be watching that, and I think it's going to be very interesting there. So I'm still holding that. LQD, it went up. I was too late. I could have got it in the morning, and I still felt late. Those shot up even 300% today. That was a clear imbalance, but it's telling you something with bonds. So watch them. I want to watch Microsoft. I'm still in that original play. It's still still down 50% on that January put. But after that news with Apple and everything else and just kind of that drop, we'll see. I want to see how that play comes out. Like I said, JP Morgan, I want them as far as a bank. That could be another shorter term play I like. They usually have some cheap options on the chain, and then, they can move a lot. It kind of has the same criteria as Boeing, and then JP Morgan is one of the, or I think it's Goldman Sachs is the second biggest one on the Dow. So it's kind of like that Boeing, and then Tesla, that one play we had started coming down, it was like an October or a put or something, but watch them. They moved up a lot today, and this could be even one of those on the short-term run, but now, since market makers have seen, Tesla's history compared to Boeing's, it's so much bigger, so they charge a higher premium. So it's harder to get cheaper plays. That'll be good. But you can probably flip premium, especially if the volatility comes down there. But I'm going to keep my eye on that. And then AMD, we're still holding. That one went up, surprisingly, and AMD's been holding up really good. And then GLD, we already went over the play. We're still holding that. This was a little surprising today, but this is looking just like we talked about on stream with as Brexit. It's looking like 2016. This is kind of normal. And again, you're not seeing equivalent moves across the board. So that means something's building up, something's waiting, and I want to see. But then CMG, we're down on this play. That play's down like 50% when we bought it. I like this play a lot. I was looking at average down on it today. You could pretty much get the same price, $30 closer to the money. What I want to do is wait for more time and see if I could get something around a similar price. But I'm getting ready to average down on it. I mean, I was considering it today, but I didn't really pull the trigger. I'm waiting. And then same thing even with Shopify. But now pay attention to the calls. Like Shopify, I would even want to maybe strangle for earnings. But and both of those plays, I just want to make sure they cover earnings. But Shopify calls went up 300%, and then the puts are down like 60, 70% from their elevated prices. So it's like a 300% different change on both calls and puts. But I like them. I'm going to keep my eye for them. And then now you have Lulu as well for earnings. We saw Micro on the earnings. As we start to see some of these companies, if they hold up, it could give us a different situation. So we will see. And then finally, TLT, I'm holding those. I lost real big on those Mays, down like 60, 70 or more percent. And that was a big position. I was very, very shocked. But that, what happened, TLT was going up today. Then it came down. It came down really big. But even when TLT was going up, we were still down. It's because TLT's moving at a much slower pace. So there was a lot of IV baked in TLT, and there still is. But this is a danger level for TLT for me. And this may even be where the Fed wants it. Who knows? So I'm still going to keep my eye out for that and just watch the balance between bonds. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure we see you there in the morning. I need you focused, baby. I need you ready. Get the helmet on. Tell me what you know about yourself, baby. Don't let them put it on you. You know what you need to do. You need your head in the game. Control the budget. This is all strategy, and slow it down, baby. Don't get forced. Don't get tossed and turned with each new wind. Surround yourself with stability, baby. That's your portfolio. Get them weekly friends out of here. Get these weekly thoughts out of here. Again, you got to balance it out. You get a little bit of the weeklies, a lot of bit of the time. Balance it out, baby. You got to keep your head in the game and control the budget. Very, very simple, but very, very complex, my friends. I need you in the game. I love you. The code loves you. I'm going to see you in the morning. Let's go.